Hello, my wonderful people. It's been a while, and yeah, I've missed you as my family. And I've been offline for some time. I had internet issues. It's not so sweet to be offline, so I'm back. Unfortunately, I did some videos yes when I was offline, but I was not in a position to upload them because uploading a YouTube video takes a lot of data and it needs very stable network, so I just had to wait until when I have the internet. That is when I can be able to do something on my YouTube channel. So today this one is just going to be something simple but very solid strategy. Okay, and as usual, my normal indicator is TDI, and I'm going to use a stochastic at default and MACD at default. Stochastic at default and MACD at default. So, and on my main chart, I've added EMA 200, moving average 200. I think you can see it above. Okay, so let me try to squeeze in so that you can be able to see more. So whatever is up, that green line is moving average, exponential moving average 200. Okay, exponential moving average 200. So how do we do this? For best results, do it on M5. For best results, do it on M5. Okay, for best results, do it on M5. If we are above the moving average 200, which is this here, please look for buy opportunities. Okay, when you are above moving average 200, look for buy opportunities. When you are below the moving average 200, look for sell opportunities. Okay, so how do we do? I want you to check the moving average 200. When it is below us, we look for buys. Let your indicators at that time, not your indicators, your chart really should be above, on the top band of the Bollinger Band. So your Bollinger Band is also on default. Your MACD should be on the above for the buys and on the lower side for the sells. So what is the right entry point so that you are not dragged, like you enter at the wrong time and then you are dragged for long? So if we are looking for buy opportunities, don't try to enter while the trend has gone up. Come to your MACD, your stochastic, and wait for it when it is on the level 20, like here. Yeah, like here. You place your buy. When your stochastic is on level 20, you place your buy. You wait for it again here. You wait for it again here. You wait for it again here. But on this here, I would wait until when at least our MACD is facing up. Okay, because anytime the MACD is facing down, it tells you some sellers were still in the market. The buyers have no longer come fully in charge. So I would wait until when the MACD is facing up. So for this, I would take it slow. But on the next one, as long as our requirements are met, the moving average is below us, we are on the upper part mostly of the Bollinger Band, and here our MACD is facing up. So just come and wait for the signal down here. So anytime it reaches down here, you place your buy. It reaches down here, you place your buy. It reaches down here, you place your buy. Okay, it won't drag you for long. It won't drag you for long. So this, and as I told you, it works best on M5s. So if you are above the moving average 200, just look for buy opportunities. Look here, this here. So our stochastic reaches level 20 and boom, here, and you hold it for a very long time. Okay, I told you, for me, I really don't close a trade, especially when I'm trying to lock in many pips as possible. I trail my stop loss instead. Okay, so our MACD here was facing up, which was our first requirement. It was above the moving average 200, which was the second requirement, and even our TDI was on the around area 50, which is like arranging. It's not buyers nor sellers, but immediately we reached our 20, which is oversold. Yeah, no, overbought for the, no, I mean, yeah, it is oversold, I mean, for the stochastic. So wait for your signal down here. The moment we touch level 20, just buy and go with it. Okay, just buy and go with it. So on the Bollinger Band, always wait for the signal either on the lower part of the Bollinger line or on the middle of the Bollinger line. Okay, those are your spike areas, especially if our spikes will be, well, if we intend our spikes to be going, not really like specifically spikes, if we intend our reversals to be going up. So like you see this area here, it was ranging for a while, and it was touching the top and the lower band. Okay, but this moment when it picked momentum, and this moment when it was ranging here, check our MACD, the way it was behaving. It was neither buyers nor sellers. So these points here, you're supposed to avoid the market. And then at this point, when the MACD again has formed and gone up, come and wait for it here. Okay, you come and wait for it down here, and boom, there you got your signal. So let's look for a point where it's definitely a sell. This here is a confused area where your MACD has already faced down, and when you can see, even when it's coming from the top, you cannot say it's reached a point where you can sell, because you see it's ranging, like telling you we are going down but still spiking. So try to avoid the markets at these times. Okay, but you can still buy, but for me, I would really wait. I wouldn't buy in such area, because it will always be ranging. Like the spikes will come, but it will not give you good result. Okay, it will not give you good result. I can only come and enter at this point, especially because we are touching EMA 200, and EMA 200 is always used as a support or resistance. The market will reverse on those areas, or cross and change the trend, so EMA 200 is main. So I would have checked here, like, if when the stochastic reached that point, if this peak of the MACD was longer than this other peak, or it was forming a divergence, or it was on a straight line, then it would have given me some assurity that it will spike on this end. And again, when you check your TDI, it was on the lower part of the Bollinger Band, so there was no possibility of it going down anymore. So even if it still wants to go down, it has to spike and go up for some time, then start restructuring itself. So I would for sure place this trade here. Let's continue. All these others is still meeting our requirements. It has to spike. As long as the stochastic is at level 20 or below, it has to spike, as long as the other requirements are being met. Yeah, so this area that our MACD has already faced down, try to avoid until at least when we are below this line. Okay, now check here. After we've crossed EMA 200, and we are facing down, yeah, so from this level here, don't look for buys, go for sales. Okay, this here, I would have maybe missed this because it was not meeting my requirements, especially the MACD here. Yeah, but if your TDI was not showing, like it was extremely pressed toward the seller side, then you know that the market did not change trend completely to go down. So you can still get some pips around this area. Yeah, you can still get some pips. But in a ranging market like around this, where it's neither up nor down, for sure this was this you could have gotten this because we were above 200 and our MACD was, you know, not like buyers, not like sellers. Unfortunately, the stochastic didn't give us a good opportunity to enter. Yeah, but our Bollinger Band here down could have been a signal, but for me it was 50-50. I wouldn't have really taken that as a serious whatever. This here coming down, it is a bit of a risky one. Yeah, but if you're one person who can risk, why I would somehow want to risk that, because my MACD, the peaks of my MACD, this peak is, you know, this one is longer than this, so it's giving me something like a divergence here. So this peak and this peak, and on the main chart this peak and this other peak, it's giving you a divergence. Okay, so in short, it was to tell you that the market will be going down. And why I would have taken the risk is because at this point we were still, yes, above the moving average 200, but after these consolidations and the divergence, I could have for sure placed a downtrend. Okay, so these two peaks of the MACD would have given you that indication. Yeah, unfortunately also at that time, maybe if you're a bit sensitive, your MACD was not meeting the requirement, but your MACD here was meeting the requirement. Okay, so you can choose how to enter that, but I would tell you wait for proper moments when your requirements are fully met. Yeah, like this point here. Why I can also risk this other one is because our moving average 200 is going exactly across us. It's neither like go facing up to show that we are on an uptrend, but it is like a straight line. Okay, and when it is on a straight line, it is more or less like a ranging market. It's more or less like a ranging market. Okay, so when your MACD starts facing down here, when your MACD starts facing down, like the bars of the MACD are covered by this signal line, you can for sure think of placing a trade. And at this time, your stochastic also was meeting your requirement. Your stochastic was meeting your requirement. Okay, and even your TDI was touching the top part of the band. And on top here, we had also come into the band, Bollinger Band. Okay, so if you don't want to risk that, then try to avoid areas where you see your moving average is like exactly midway, and wait for opportunity like here. Like now, especially, the trend will always be going down after here. So again, come and check the peaks of the MACD. This one is higher, so higher, less higher, smaller. It is going down. Yet on top, it's on a straight line. So this one should have shown you that the uptrend is really losing the momentum. Okay, so from here, comfortably place a sell trade. Comfortably place a sell trade as the MACD is ready to face down. Okay, as the MACD is ready to face down. Unfortunately, our stochastic at that time was not at level 80, yes, but it was a very valid signal. Okay, so at bottom here, always look for buy opportunities. At the top here, always look for sell opportunities. This is a boom 500. Yeah, so when you go to the 1,000 pairs, let me just do that. When you go to the 1000 pairs, let me just go to 1000 chart, it gives you more clear trends, like especially now, like here. It gives you more clear trends. Check here. Let me first look for where. Very nice, very nice. So our moving average 200 is above us to show us that we are on a downtrend. Our stochastic, our MACD is already facing down. Yeah. So anytime our stochastic here reaches level 80, go for a sell. So you could have entered a sell trade here. So anytime you're in this setup, don't try to look for a buy, go for a sell. So you did sold here and came all the way with it. Okay, came all the way with it. So where is your take profit point? You choose where you are comfortable with, but I would not want the TDI to be extremely like strained at the bottom, like these three lines are trying to come together. I'll try to avoid that, so I would have probably taken my profit around somewhere here. Okay, I would have probably try to take my profit around that area. Also, you remember I always love placing my MACD on an RSI, and the RSI I put levels 90 and 10. So before it touches level 10 of the RSI, I always take my profit there, because by the time your MACD touches level 10, the spikes will start from that point. Okay, the spikes will start from that point. So if I entered my trade around this area, I would come all the way with it. How did it come? Actually, this was the right point here to enter your trade when the MACD, when the stochastic had already reached level 80, yet we are on a downtrend. So that is your right place to enter, and then just hold until when the MACD touches level 90 or around 85, you exit. So all this time is an opportunity. All this time is an opportunity. Look here. Like this point, if you're not entered all the way up there, here, when your stochastic has come to touch level 80, is still another opportunity. You can take these pips down comfortably. Okay, so as long as the moving average 200 is above us, just for sell opportunities, go for sell opportunities. When the moving average is below us, just go for buy opportunities, like these points here. Yeah, this was cutting across exactly. So catching spikes in such an area is very comfortable. Like the market will not strain you for long if you're trying to catch spikes. And at this time, the most secret part also is your MACD is facing up. Okay, when the MACD is facing down, go for sell opportunities. Yeah, around this area, it was more of a ranging market. When it's a ranging, sorry. When it's a ranging market, try to avoid. Okay, when it's a ranging market, try to avoid. Or if you want to catch spikes at that time, it would be a very good opportunity, especially if your MACD is very small. It's not giving you a clear direction whether it is a buy or a sell. Okay, so when your MACD is small, come and wait for it at the stochastic. If your MACD is facing up, come and wait at the stochastic down. It must for sure spike. Yeah, so this one, my dear friends, was just a short one. I hope you enjoyed it. Look here, our moving average 200, EMA 200 is below us, and here it was used as a support. I told you it is always used as a support or as a resistance, and especially when the trend wants to continue in the direction that it was going. Okay, so and while this point here was happening, our MACD was like as much as it is facing down, it is in a sort of an indecision position. Why? When you check this peak here, this peak here, and this peak here, they were on the same length. They were on the same length. So it's not giving you a sign of like the sellers or the buyers in the market. So it is a weak resistance point. So when you see this point here, just come and wait for your market at the stochastic level. Come and wait for your market at level 20 and then ride with it all the way up. Okay, ride with it all the way up. So this is a kind of a setup where you can be able to get a lot of pips if you just go trailing your stop loss, okay, until at least when the market will when the market will take you, when the chart will take you out of the market. Okay, so that's it for today, guys. Like here, you can also use this stochastic to take your profit, especially if your stochastic has gone all the way to the peak. As it's trying to reverse and come down, you can take your profit. But mostly, I use the MACD. I use the MACD after it has touched my level 90 or 10. As it's trying to come back down, I take my profit from that area. Because after that, you will no longer be getting like, very many pips, but the market is ready to reverse and go the other direction, okay? So try to use the MACD to take your profit, okay? So that's it for today, guys, and I'm happy to be back again to be giving you valuable tips. This is a kind of a trade setup where you can be able to get a lot of pips, in the sense of you can't limit yourself to one spike, okay? And it is so easy to target 100 to 200 pips with this kind of strategy on any volatility pair, either 500 or 1,000, So if you're able to get 3 to 4 setups on the different pairs, you can easily bag in your 300 pips in a day and you're good to go. Okay, you're good to go. So don't force the market, let the opportunities come to you. Don't try to force trades, let the setups come to you. And when the setups present themselves, go into the market. It's all a risk, but when you've done your analysis well, the risk reward ratio, especially on boom and crash, is always so good. Okay, it is always so good. The only secret on boom and crash is just know the direction of where the market will be heading. And how do you know where the market will be heading? Things like the MACD will give you that direction. So if the better part we've been facing up, and especially the moving average is below us, you know we are still on an uptrend. So if we are still on an uptrend, just come and check the stochastic and place your trade at the bottom. Okay, so those are small tips that can help you to grow your small account. Okay, so many people again have been asking me how to manage their small accounts, like $20, $30. It's possible to come and place your buy or your sell in this kind of setup with very small lot. If you have a $20 account, use 0.2, no, 0.02 or 0.03. So how do you do that? You open a 0.22 lot and then close 0.20 and then let 0.02 run, okay? So that it does not strain your $20 account. So you, of course, you will be making the baby steps, but collecting that $1, $2, $3 per trade, eventually you will have grown your account to $50, and then from there you can start placing the 20 lot and above. Okay, so use proper money management, guard your capital, don't give it into the market, and don't try to force the trend, because I know sometimes we give you a lot of strategies outside here of how to catch spikes. Like for me, I'm so good in catching spikes and I can always tell you where it will spike next. But again, don't try to pick my knowledge or try to pick my strategy, and especially the strategies that we give on free channels. Don't try to pick it and say, you said it will spike here and it didn't spike. No, the the market makers manipulate trades. Okay, they manipulate trades, and they always make sure that the strategy that we give you will work for a short while, and then after that it will not work. So don't always think that the strategy that worked today will work tomorrow. So it's key also to know the trend of the market. It's key to know support and resistance. It's key to know price action. It's key to know reversal points. Okay, it's key. And for me, of course, I've not done much of price action on my channel, and I've not done also like analyzing the market from the higher time frame. Why? Because when I see on the lower time frame, I can always depict where it's going. Okay, but now for this kind of strategy now today, tell you do it mostly on M5. M5 will give you a clear direction of where the market will be heading. Okay, so this is more of a price action kind of strategy. That is why I'm telling you, don't look for one spike, but go for 50 to 100 pips. Okay, go for 50 to 100 pips, and with that kind of setup, you're just good to get one setup in a day, like this point here. If you're in the market and really got this setup here, and you took that trade, it's enough for the day. It's enough for the day. Don't overstretch your account. Don't risk too much. And when you're overconfident like me, you can triple your account with this just setup in a day. Okay, so that's it for this tutorial, guys. And if you need my personal time, please join my VIP. If you need my personal time and attention, join my VIP. It only goes for $60, and I have super good strategies there. You will not be stranded. Also, the Pip King Spike Hunter is in the VIP. Many are asking me about the Pip King Spike Hunter. It is part of the VIP. You will get access to it, and you will get my undivided attention. So that's it. God bless you. Happy trading. Shalom.